Today, we're going to break down a story that's causing some major ripples all across the globe. We're talking about a conflict in the Middle East and how it's directly connected to the price you pay for just about everything. Okay, let's dive right in.
So picture this. You wake up, you grab your phone to check the news, and bam, oil prices have absolutely soared overnight. It's one of those hypotheticals that, suddenly doesn't feel so hypothetical anymore.
That's the number that has everyone on edge. $100 a barrel. It's a price point that sends shockwaves through the entire system. You start to see gas prices ticking up, the stock market gets all nervous and takes a dip, and you can just feel this sense of unease settle in. But what's really going on here?
Well, the answer isn't down the street at your local gas station, and it's not really on Wall Street either. It's actually found thousands of miles away, and it's all rooted in these escalating tensions in the Middle East, one of the most critical, if not the most critical, regions for the world's entire energy supply.
So why does a regional conflict have such a huge global domino effect? Well, it really boils down to three core reasons. They kind of explain everything that's happening behind that price tag.
First, you just have to understand the sheer scale of this thing. Look at this chart. The Middle East produces roughly one-third of the entire world's oil. So when a region that has that much influence over the global spigot becomes unstable, the entire market just holds its breath. Any disruption there is a huge deal everywhere else.
And this right here, this illustrates the biggest vulnerability perfectly. This is the Strait of Hormuz. I want you to think of it as the world's most important superhighway for oil. We're talking about nearly a fifth of the world's daily supply having to squeeze through this incredibly narrow passage. If that gets blocked, or even just becomes too dangerous to travel through, a massive chunk of the world's oil supply just stops.
So these geographical facts create what is basically a perfect storm, and it's driven by three key factors. First is just plain old fear of supply disruptions. Even if nothing's happened yet, traders react to the possibility. Second, you've got real-world shipping risks. Insurance costs for tankers go through the roof. And third, good old-fashioned investor speculation, with traders betting that the price is only going to go higher.
Okay, so that's the big global picture. But what does this all actually mean for your daily life, for your finances? Let's bring it all the way home.
So how does this actually hit our wallets? Well, it comes at us in three main ways. The most obvious one is right there at the pump. It's the one you see in giant numbers on the side of the road. As global oil prices rise, so do gas prices. Simple as that. And this really gets to the heart of the matter. See, oil isn't just for cars. It's like a hidden ingredient in almost everything. It's used to transport the goods we buy, to manufacture the products we use, and even to grow our food. So when the price of that one key ingredient goes up, it just pushes up the price of pretty much everything else. That, my friends, is inflation in a nutshell. And then, of course, you've got the stock market, where we see this really clear divide between the winners and the losers. As you can see here, energy companies might see their profits and stock prices soar, but for industries that are super reliant on fuel, look at airlines, or companies with high transportation costs like in manufacturing, rising oil prices just squeeze their profits and can send their stocks right down. And make no mistake, this isn't just a local problem. The impact of an oil price shock sends this powerful wave across the entire, deeply interconnected global economy. And if we look back, history offers a really stark warning. This isn't our first rodeo. Major oil crises in the past, like the ones back in the 1970s, they triggered severe global recessions. The big question mark on this timeline? Yeah, that's what has everyone holding their breath right now.
This brings us to the folks in charge of the money. Why are institutions like the U.S. Federal Reserve paying such incredibly close attention? Because an oil shock is a central banker's absolute nightmare. It pushes inflation higher while at the same time threatening to slow down economic growth, making their job of keeping the economy on track way, way harder.
So, in the face of all this uncertainty, investors do what they always do. They run for cover. We see this classic flight to safety, where money just flows out of riskier assets and into things considered safe havens, like gold, U.S. government bonds, and those stable, defensive stocks.
All of this brings us to the most important question, right? Where do we actually go from here? The future could really hinge on how this whole conflict evolves.
Broadly speaking, we're staring at a big fork in the road. On one path, tensions ease, the oil keeps flowing, and prices stabilize. Maybe they even fall back. But on the other, much more dangerous path, the conflict escalates, shipping routes get disrupted, and prices could surge well past that $100 mark, causing some serious economic pain for everyone.
So, let's just boil it all down. What are the key things to take away from all this? First, geopolitical tensions in the Middle East are the engine driving this whole oil price surge. Second, the price itself is this cocktail of fear, real-world risks, and market speculation. And finally, and this is the most important part, this isn't just some headline. It has very real consequences for your wallet, for the U.S. economy, and for the entire globe.
The truth is, the situation is incredibly fluid. It's changing by the day. And that leaves us with a big, unanswered question that everyone, from world leaders to everyday folks, is asking. What do you think comes next?